So why am I doing it? Why am I selling Palantir stock? Well, today I cashed another 200 shares of Palantir stock. Okay. Now, you keep in mind, it's not like I'm selling out of my shares completely. I'm selling them out in batches when it comes to Palantir stock. And we'll talk about if I'm going to continue to sell those shares or not, right? The thing you got to understand about Palantir is it's been in a lovely cycle for the past, 2 to 2.5 years now at this point in time. A lovely cycle is when a company just continues to show revenue growth acceleration, not revenue growth. Revenue growth is whatever. Like I could give you a list a mile long of companies that have consistently produced revenue growth. You're special when you can have revenue growth acceleration, right? Which is what has happened with Palantir consistently quarter after quarter after quarter for 2+ years now at this point in time, right? Went from 12% growth to 16% growth to 19% growth to 20% growth to 27% growth to 30% growth to 36% growth to 39% growth, right? So the question is, where's the top for Palantir? Is it 40%? Is that going to be the top and then they start heading down from there? 45%? 50%? We don't know, but I would say we're pretty close to a top in regards to Palantir's revenue growth acceleration. The revenue growth acceleration phase is getting close to an end here. As in, I wouldn't be surprised if it ends next quarter. I wouldn't be surprised if it ends 3 quarters from now. But we're let's call it deep into this revenue growth acceleration. And what happens after a revenue growth acceleration period is then you begin to have a revenue growth deceleration period, where let's say you get your revenue growth up to 44%, let's say hypothetically, right? And then it goes down to like 40%. Then down to like 38%, then down to like 35%, right? And you kind of go through that cycle. Now, Palantir in the last growth cycle got all the way up to a shocking, this is a huge number, 49% revenue growth rate in the last cycle. Folks, let that sink in for a moment. 49%, that's 10 percentage points higher than where Palantir's revenue growth is right now. Now, do keep in mind, Palantir is a much bigger company today when it comes to their income statement, their revenue. So, it's harder for Palantir to get up to a 49% number, but they got up there. But then what happened is after Palantir went through that revenue growth acceleration phase and the numbers are getting bigger and bigger and going up, it started to go down and it went down to 35%, 34%, 30%, 25%, 21%, 17%, and all the way down to 12% at the lows, right? Brutal. Now, what happened to Palantir? And by the way, they kept growing that whole period. It's not like their revenue ever went negative. No, even at their worst, they were still growing double digits. But what happened to the stock price when they were going through that revenue growth deceleration phase? Well, Palantir's stock price went down 80+% over that time, versus a Q's that was down about 7% and SP 500 up about 6%. And Palantir went through an 80% plus fall. Absolutely brutal. And this wasn't even the lows for Palantir. Palantir lows was in the 5s. I remember Palantir being like 598 at the lows, like really, really bad. Okay. Now, I have good news for everybody watching this video that maybe is a Palantir shareholder right now. I have really good news for you. Okay. I do not see things getting this bad over the next 2 years. I think Palantir's revenue growth likely peaks probably in the next, I'd say 1 to 3 quarters here, okay? And then the deceleration phase starts, okay? I do not see it going that bad, where Palantir goes from 49% revenue growth down to 12%. So that's the good news, okay? I don't think it's going to get that brutal in regards to that. That was a rather dramatic situation that happened here, right? Now, somebody in my private stock group member, he said, do you think the stock price will remain elevated as long as the growth is sustained above 40%? For 40% plus for consecutive quarters with no major dips, will the stock price even if growth plateaus at 40%? And so I framed it like this. I say, usually, because I want everybody to really understand this on a deep level in regards to revenue growth acceleration phases and deceleration phases, okay? And why it matters so much for a stock price. I said, usually when revenue growth deceleration starts for a high flyer, it gets wrecked over that next 12 plus months. Momentum traders move on, growth investors start to head toward the exits. As simple as possible, growth acceleration quarter after quarter equals a higher stock price. Growth deceleration quarter after quarter equals a lower stock price. The more dramatic the deceleration or acceleration is, the more dramatic the stock price move, which is exactly a great example of Palantir, right? This was a very dramatic, when you go from 49% revenue growth down to 12% in a 2-year span, that's dramatic. And what ends up happening is a dramatic downward move for the stock, which is why the stock went down 80+%, right? On the flip side, when you go from, 12% revenue growth all the way up to 40% revenue growth, guess what happens? A dramatic move up in the stock price. And that's why Palantir a few years ago was a $5, $6 stock. And here today, Palantir is about a $150 stock because of how dramatic that change has been. Okay, so it's very important everybody understands this. I said, but if they can maintain a 40% revenue growth rate for the next 5 years straight, I said the stock could maintain the current valuations. Gains would be somewhat limited, but a stock crash is unlikely if quarter after quarter, year after year, they grow in the 40% range. It's as simple as that, folks. It's as simple as that, okay? Now, let me begin to take you through my projections for where I see Palantir stock going over the next 4 or 5 years, my bull case, my base case, and my bear case for Palantir. And you guys will begin to understand here why the risk reward is not as attractive, okay? Here we go. So, this is my bull case for Palantir. Listen, this is extremely bullish if Palantir was to pull this off. Listen, do I expect Palantir to do this? The answer is absolutely not. I would put odds that Palantir puts up these sorts of numbers for the next several years. I would put the odds on this at, I would call it less than 5% probability. I might even take it down to like a 2% probability, right? I live in Vegas. We put odds on everything in this city, okay? Yeah, the odds that this happens, extremely low. I'd be a very happy camper if it does. Very low, okay? So a very bullish scenario, like insanely bullish scenario for Palantir would be this company 2026 through 2029 grows revenue 40% per year, year after year after year after year. That'd be insane. Not only do they do that, but their net income far outstrips their revenue growth. So they grow 20 percentage points more net income than they do revenue. Insanely bullish if that was to happen. Not very probable at all, but let's say it did. 60% year after year after year after year. That would put them at net income margins of well over 50%. That would be a ridiculous number. Not very realistic, but we're rolling with it, okay? No, you could say a stock growing like that, that's kind of a SaaS type business model, right? You could throw easily 100 to maybe even a 200 P ratio on a stock like that, which then would put the stock somewhere between about $350 and $700 come 2029, which would give you a compounded annual growth rate on the low end of 24% and on the high end of 47%. So if that insanely bullish scenario plays out, sure, you're going to make a lot of money in Palantir stock the next few years. But once again, I would put the odds on this at less than 5%, probably closer to 2%, okay? Like, if you're going to flip a coin 100 times, like, it's only going to come up positive twice for the whole Palantir situation, okay? What about my base case for Palantir? Like, what do I actually expect for Palantir to do for numbers from, basically 2025 to 2029? Here's what I expect. My base case for Palantir has them growing revenue in 2026, 36%, revenue in 2027, 33%, revenue in 2028, 30%, and then 2029, 27%. So I have them like having a slight deceleration year after year after year, but still, even in 2029, still growing 27% revenue. That'd still be very impressive. That would put them at revenue come 2029, nearly $12 billion. That would be a big come up for the company, a big come up, okay? Additionally, I have their net income growth growing 10 full percentage points faster, 1,000 basis points faster than their revenue, right? That would put them at net income margins of 42% come 2029. I think that's possible. I really think that's possible for Palantir, okay? Now, For a company growing top line 27%, bottom line 37%, you're probably, for a SaaS-ish related type company like a Palantir, you're going to probably slap a 100 to 120 P ratio on a stock like that with those sorts of growth rates in this category. Puts a stock somewhere between about 215 and about 258. Gives you a compounding annual growth rate of 10% on the low end, 15% on the high end. So there's money to be made, but it's not a lot, man. It's not a lot. And those numbers I'm expecting are very strong. What happens if things are a little more bearish? Now, this isn't even a super bearish case for Palantir. This is just a bear case for Palantir. Well, here's what you're looking at. In a bear case for Palantir, I have them growing 35% in 2026, top line, down to 30% in 2027, down to 25% in 2028, down to 20% in 2029, okay? I have their net income growth still, even in a bear scenario, still growing a whole 500 basis points quicker than revenue each year. 40% 2026, 35% 2027, 30% 2028, and 25% 2029, okay? Now, what does that do? I'd say that probably, with revenue growth decelerating, like you're probably going to command for a company in this category probably between a 60 and an 80 P ratio come 2029. If they're still growing at 20% top line, 25% bottom line, which is very respectable. What do you get? You get a negative return. You get a negative return. This stock come 2029 would be priced somewhere between about $99 and about $132. So year after year after year, so many years would have went by and you would have lost money. Not made money, you would have lost money, okay? This is the issue with Palantir now at this point in time. The risk reward in regards to Palantir is no longer attractive. If somebody wants to buy it for the next month or two because they think earnings are going to be another banger, they're going to show another revenue growth acceleration, we're going to have another hype cycle with the stock, I get it. But the risk reward for holding the stock over the next 4 to 5 years is not attractive in my opinion because the valuation's been so pushed so far. I mean, you're looking at, forward Ps and 2-year forward Ps in the 200s. It's just, it's gone to just insane levels now at this point in time. The market capitalization for Palantir is way into the $300 billions now at this point in time, right? With potentially a lot of share dilution coming down the pipe here from basically the stock going so insane and a lot of, let's call it insiders in the company potentially getting a lot of shares of stock coming. So, I mean, these are all things you got to factor in here. The risk reward is just no longer very attractive in regards to Palantir, especially if you're buying the stock. Even if you're holding the stock, it's not getting very attractive anymore. But if you're buying the stock, you're playing with fire if you hold the stock past 26, essentially, okay? Now, here's my deal in regards to Palantir, okay? Am I going to sell more shares? My plan is if this stock continues to go risk on, let's say the numbers are a banger, they show another revenue growth acceleration, let's say they get up to 43, 44% revenue growth acceleration, the stock goes well over 150, let's say the next thing you know, the stock's 170, 175, whatever. I'm going to sell another 500 shares of Palantir essentially, okay, after this earnings, big if, the stock goes huge risk on again, okay? And just everybody's losing their mind over this. And then my opinion with Palantir, what I'm likely going to end up doing is I'll likely hold 1,000 shares for the super long term, right? Just in case I'm wrong about Palantir, and let's say Palantir over the next 5-10 years becomes a multi-trillion-dollar market cap, right? Let's say they do have a scenario where they grow 40% plus a year for years and years and years to go in the future. Maybe I'm wrong about Palantir in that bull case that I say is, let's call it a less than 5% probability. Maybe it comes true. At least I'll have some skin in the game, 1,000 shares there that I can still make really good money on. But if what I think is going to happen with this company from 2026 to 2029, it's not going to be a good hold. It's going to be likely a money loser or a flatline stock, essentially, right? So that's kind of my plans with Palantir. Cash another 500 if this stock goes huge risk on into year end, and then hold the other 1,000 shares for the long term, right? Which is something I was doing with Tesla for quite a while. The only reason I ended up selling out of Tesla completely is obviously because of the old Elon Musk, completely sidetracked on politics and all that stuff. That's what made me say, you know what, I got to get out of the stock completely. So, that's what I'm looking at in regards to Palantir. Now that leads us to the next very important question. Would I call Palantir stock a bubble? The B word, a bubble. Well, If you've been watching my channel for a long time, well over 6 years ago, I did a video called "This is the biggest stock market bubble I've ever seen in the stock market," right? And in that video, at first, I talk about how the 3D printing stocks were a huge bubble, and that was like a bubble before I even got on YouTube, okay? But in that video, I talked about a stock named Tilray, and I think I talked about Kronos and maybe another one or two, okay? And these were the pot stocks that were just red hot back then, okay? I think Tilray's down something like probably 90 to 99%. Since I did that video, essentially. You know, they try to do, from what I remember, I think they try to do a bunch of reverse splits and whatever. But at the end of the day, like, if you were buying Tilray stock on the day I posted that video, you probably lost 99% of your money or maybe 100% of your money since that time, right? And I did that video on September 19th, 2018. It was a huge bubble in the market at that particular time. Rivian stock. Somebody actually was watching this video recently and left a comment, and I forgot I even did this video. Rivian stock at that time was $168 when I did that video. I said, this will get ugly. Rivian stock is a massive bubble. And people were so hyped on Rivian at that particular time. Since that video's come out, I believe Rivian's down. I want to say Rivian's down over 90% since that video came out, right? It was a huge bubble in the stock market, okay? But listen, Tilray and Rivian were different than a Palantir. Tilray and Rivian had major issues in their business model. Big difference between Palantir and what's going on with Palantir and what was going on with somebody like a Rivian or somebody like Tilray or some of those other companies. Tilray and Rivian had very questionable business models, losing massive amounts of money, right? Like, Palantir doesn't have that. We don't have question marks about, like, can Palantir's financials be good in 5 years from now? No. Like, the issue with Tilray and Rivian is if you invest in those stocks when everybody was talking about those, when they were just making that insane run, like, you fast forward 5 years, you lose 90% plus your capital, right? Between 90% and 100%. If you buy Palantir today, I don't foresee you necessarily losing 90% to 100% of your capital. I see it being a situation where if we fast forward 5 years from now, maybe you have very small gains on it, maybe you have small losses on it, or maybe the stock's roughly flat 5 years from now, from where you're buying it today. So you buy it at 150, you know, you might have a small gain on it from here for the, 5 years out. You might have a small loss, or you might be, like, that's a way different situation than what I could foresee in regards to Rivian and Tilray. Rivian and Tilray, it's like people are probably going to lose 90% to 100% of their capital. It's very different than a Palantir situation, okay? Palantir has major valuation problems, major risk-reward problems, not major business model problems. Tilray and Rivian had major business model problems with the valuation problems, and that's how you get a stock to fall 90 to 100%, okay? Very different than Palantir, and you got to understand that, okay?
Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you looking at in front of you right there? That's the 6-figure Hall of Fame. Do you want to see the next one? That's the 7-figure Hall of Fame. Now, that is my private group. Those are members of my private group that have scaled to 6 figures, multi-6 figures, 7 figures, multi-7 figures in their stock market portfolio. They say you are the average of the 5 people you associate with. If you're somebody that is having trouble finding other long-term investors that are focused on building their wealth over the coming years, finding like-minded folks, look no further than my private group. We got a tremendous amount of people. We're consistently talking with each other, learning from each other, researching companies together, sharing news about our different companies, right? We do all that inside my private group. If you would like to apply to join us in there, go down in the description area. There'll be an application down there. You can click on that and you can apply to join us in there and take your game up to a much higher level and associate with the type of folks that you actually want to associate with.
Well, if you didn't know when Palantir is reporting earnings, I have it for you right here, baby. They're going to be reporting earnings after the close of the market on August 4th. All right. That's, we can call it 12, maybe 13 trading days away from now. Either 12 or 13 trading days from right now. Okay. Not that far in the future. That's coming up much sooner than you anticipate here, right? Now, here's what I'm looking at. I'm looking at a situation here where the stock's 151. So let's say I cash out another 500 shares. You know I want to cash out another 500 shares before year end, right? Let's say I go ahead and I say I'm going to do it before earnings. I'm definitely a little scared that this stock could run to 175 plus after earnings. And we'll talk about that in why that could happen here. Now, on the flip side, let's say I don't sell that 500 shares. And let's say they start coming in with a deceleration of a growth rate. bye-bye to the 150s. And we might not see the 150s again for years if they posted a deceleration of growth. But I have a lot of questions if they're going to decelerate quite yet, okay? And here's why. If you look at there's a clear trend that's going on with Palantir, right? It's accelerating and accelerating and accelerating growth, right? And so if you just look at the trend, there's a pretty high probability that Palantir will likely come in with a growth rate, a revenue growth rate in the 40s, right? One is just by looking at the trend, like, if the trend continues, we're going to have something in the 40s for this revenue growth. But you take it a little deeper than that, right? And it also adds up pretty well because the quarter they have to comp against, essentially last year, it's a 27% growth quarter. Now that's a pretty strong number, but you got to understand what that quarter comped against. That quarter comped against a 12% revenue growth number, the worst number Palantir's put up in years and years and years and years and years. Like you got to go back a lot of years to find Palantir growing. Actually, that might be the worst growth rate the company ever had in its history. Like, no joke. If it's not the worst the company's ever had, it's one of the worst numbers they ever had in terms of revenue growth. 12% is awful for the company. So this quarter looked like it was pretty strong growth at 27%, but it comped against such an embarrassingly weak number for Palantir at that particular time. So the moral of the story is here, I don't think 40% plus revenue growth here is out of the realm of possibility at all. Now, let me take it a step deeper for you guys and show why it's very possible this could be a 40% plus revenue growth quarter, okay? Listen, look at what number they put up last quarter if you exclude commercial contracts, the strategic commercial contracts, which is the whole SPAC crap they were doing, right? Which that's going to start rolling off for the company now at this point in time, right? They reported 44% revenue growth if you exclude strategic commercial contracts. Uh-oh. That was compared to only total revenue growth of 39%. So those are going to start rolling off here. So to say they're going to not grow 40% plus, I think there's a higher probability they grow revenue 40+% than don't for this quarter they're about to report. As in, I think there's probably about a 75% chance they end up growing revenue 40% plus, and probably a 25% chance they grow less than 40% for this quarter they're about to report here, okay? Now, additionally, this is very impactful for Palantir, the rule of 40, right? This looks at the company's margins, not gross margins, the operating margins, and their revenue growth rate, right? And what you're going to find here is the recent number was 83% for their rule of 40. Okay. Listen, I think their revenue growth is going to accelerate again, likely, it's 75% probability, and their margin probably going to go even higher, which means you could see a high 80s number for the rule of 40, which is just, 83 is even ridiculous, but we could be talking about this number going to 87 or 88, maybe even 89 this next quarter. That's going to, this is the type of stuff that's going to get people very, very excited about Palantir. And this is the type of stuff that if also you start talking about rule of 40 of 88 or 89, you start talking about 40% revenue growth for Palantir, that's the type of stuff where you could get a blow off top in the stock. And you could get the stock to go 175, 200. And just everybody's just over the moon with Palantir. Like, obviously people are already super excited, but man, they come in with a 40-something% revenue growth number. They come in with a rule of 40 in the high 80s. People are going to flip their flapjacks, man. They're going to lose their mind. And so that's what I worry about is all of a sudden, I look out and let's say I sell the 500 shares before at 151 or 152 or whatever, right? And then, I lose out an additional, $40 a share. I mean, you could do the math on that. 500 shares times, another $40. What would that be, $20,000 of extra gains loss? It's not like it's a small amount of money, right? It's not a small amount of money. It's a large amount of money. That's tough. So, but here's the deal, okay, with Palantir, all right, in the kind of medium term here, okay? I'm very confident that in the next 3 quarters, essentially, one of those quarters will be when the dreaded day comes where Palantir actually starts to show deceleration of revenue growth, right? They go from, let's say the top at 45% revenue growth, they all of a sudden start going down like 42%, 39%. And that's going to be when a reckoning comes for Palantir stock after that, okay? Because of where the valuation is, and, everybody's gotten so used to these accelerations of growth rates. But the tough part is, what quarter is it? I don't think, like I said, I think there's only about a 25% chance it's this quarter they're about to report. So I would say a much higher probability of it being either the November quarter or the February quarter when they start to show a deceleration of growth. Now, maybe they don't even show a deceleration of growth. Maybe they take it up to, let's say this quarter, 42%. Then this quarter here, 45%. Then this quarter here, 49%, right? Then the next quarter, 55%. I don't think that's happening, right? Like at some point in time, the trend will break and Palantir will get smacked hard. And the issue is, it's not just that Palantir stock's going to go down. That's the thing people got to understand in regards to Palantir. Palantir will go down and not come back to that price for years. We're not talking months. We're not talking quarters. We're talking years. It will be years before Palantir. So let's say Palantir tops at 200 and then the deceleration starts. Like Palantir won't see 200 again for probably 5-10 years after that. It would be a long time. A long time. So that's the thing you got to keep in mind here. And it's always possible it never even hits that level again. Whenever you're dealing with one of these stocks that's trading at like ridiculous price to sales ratios, P ratios, forward P ratios, things like that. When that cycle of deceleration eventually starts, it gets ugly really, really quickly, right? When you're trading like that. So tough decision that I'm going to have here, but I don't know. I'm a little bit leaning toward waiting until after the earnings. But then again, we'll see. Like, who knows? What if Palantir's 175 before the earnings? Shoot, man. And then the one last thing I could do. The one last thing is I could sell, since I want to sell 500 before year end. Here's the last idea, okay? I could sell 250 shares before the earnings and then sell my other 250 shares after the earnings. Could do that as well. A little half and half, and so I don't have to decide about the whole 500 at once, right? Which sometimes I like. And if you notice, I've been slowly de-risking Palantir and selling some shares in 100 or 200 share batches. So maybe that's what I'll do, okay?